Hello, everybody. It's Mark Johnson with Cross Country Mortgage, and I wanted to just take a few minutes and just show you where interest rates are today, because a lot of people are they're surprised to see that interest rates have gone up so much since the first of the year. Today, we're looking at right around 3.625 on a mortgage, and with an APR roughly of 3.749. And I wanted to just take a minute and show you the difference between where rates are today versus where they were last year versus where they're probably going to go during the next year. So after being in the mortgage business for over 40 years, I have seen interest rates skyrocket and I've seen interest rates plummet. And of course, we saw that in March of 2020, the Federal Reserve caused rates to just drop like a lead balloon. And that's helped everybody. That's helped first-time home buyers. It's helped people who wanted to move up into a nicer home, on a home that maybe they've outgrown. It's helped people refinance because also home prices have gone up. And so people have a lot of equity. And so I just kind of wanted to give everybody an update of about really where interest rates are at. So let me just share my screen with you here for a second and just kind of go over the numbers with you here. Just a second here. Okay, so today, as of today, February 1st, I can't believe it's February 1st. Today, a home that would sell for $500,000 and you put 20% down, that's $100,000. And you get a loan amount of about $400,000. This is a scenario I want to talk about in today's market. Again, the rate would be 3.625, APR 3.749, 30-year fixed rate mortgage. Your payment with taxes and insurance, and this is just an estimate, but that would be about $2,211. Your out-of-pocket expenses, for closing costs and discount points and prepaid items would be right around $9,000, so a total of $109,000. So that's where you would be today. Now, if you were to have bought a home last year, that same home would have cost you $410,000. Last year, appreciation went up a whopping 18%. I hope we don't see that again this year. I think projections show that we're going to go up somewhere around 10%. But last year, that same home that you want to buy today for $500,000 sold for $410,000. 20% down gives you that loan amount. Interest rates were somewhere around the 2.625, maybe even a little bit lower, maybe as low as 2.25, but I wanted to be conservative here in my numbers. And so your out-of-pocket expenses for taxes and insurance and prepaids and discount points would be $90,000. And your monthly payment would be $576 less per month than what they're going to be in today's market, where today's rates are, where today's sales price is. Now, what if you wait? And that's the big question that I get from everybody. And so I've created this what if scenario. If you wait 1 year, where do you think things are going to go? Well, I think that the same home that is priced at $500,000 will go up about 10%. So that is going to be right around $550 here. You're going to have a down payment. Your interest rate. Now, the Federal Reserve has stated that they're going to raise rates probably 4 to 5 times during the next year. And usually they raise it in about 0.25% increments. And so that could be anywhere from, 1% to 1.25%, but they're also talking about raising rates in March a full 0.5% above where they're at right now. So that's why there's urgency of getting into a home as soon as possible. So let's just take the scenario all the way down. $550,000 sales price is what it's probably going to cost next year. Your down payment and closing costs, are going to come in $10,000 more than they will this year. And then your mortgage payment is going to be another $476 more per month than they would be if you were to buy this year. Now, I know a lot of you are thinking, well, maybe I just need to wait until next year because I don't have 20% down. Well, if you have 3% down and you're a first-time home buyer, you can buy today. All you have to do is give me a call and we can get you pre-approved for a mortgage, or click on the link here that I'll put on there so that you can apply online. And don't wait any longer. If you can buy now, now is the very best time for you to get into a home, and we're here to help you. If you're looking to refinance, do it now. And what I would do, and I would strongly suggest this, is to take all of your consumer debt and include it in your mortgage, and then take that extra money that you're saving every month and pay down that mortgage so that you can pay it off quicker. And I can show you how to do that too as well. All right, thanks for listening. Have a great day, and we'll talk to you soon.